So over the last year, I've been buying a lot of stocks and I make a lot of TikToks about it. And every time I make a video, someone says, "What are you, nuts? You're investing in the stock market now? It's gonna get worse. You're crazy." Or I get comments from people saying, "Don't listen to this guy. He doesn't know what he's talking about. He's buying at the worst possible time. The stock market's going down. That's not when you're supposed to buy." Of course, then when the stock market goes up, those same people go, "Well, I don't want to invest now. Stocks are going up." When it comes to the stock market, the way I invest, and this is the way I invest, it's not necessarily the way you have to invest, it's just the way that I invest, is in a bear market, like what we're going through right now, or have been going through over the last year, nobody knows where the bottom is, right? Nobody knows where the bottom is, when the markets are gonna turn around, head higher, have a rally. Nobody knows. As long as you are investing in high quality companies, that's the important keyword, high quality companies that you know have been around forever and will likely be around for a very, very long time. The strategy that I like to employ is buying a little bit at a time. So let's say I want 100 shares in a company. The thing that I do when I want 100 shares in a company, especially in a bear market or a down market, or when bad earnings are coming out or bad economic news is coming out, the thing that I do is I buy a little at a time, 10 shares, maybe 25 shares. So I'm getting something, I'm building a position. I think the mistake a lot of people make is they say, well, if you're buying stocks, you're probably buying everything all at once, and that's really stupid, but that's not how I like to do it. I like to have what I call a little skin in the game. That way, in case I'm wrong, then I don't sit there and go, oh, I should have bought. Oh, why didn't I buy? So I might have 25 shares. I might have just started a position and, what do you know, markets have rebounded and the recession or the bad economic times are behind us and markets move higher. Well, 25 shares, better than nothing. The last thing I want to do is buy 100 shares in a company, my whole position. And then markets drop and get way worse. And I don't have any more money to invest. I don't have any more money to buy that dip because I went all in. I don't do that. I buy a little at a time. And I'm buying good companies, right? That's the key word here. Good companies. Solid companies. I'm not throwing good money after bad. I'm not buying highly speculative stuff. I'm buying 10 shares at a time, 20 shares at a time. I'm reinvesting my dividends. And I'm not buying every single down day either. I'm buying on the really big down days when they come out and they go, oh my God, economic news, so many people just lost their jobs and the market's crater. Or, oh, this company just laid off all these people. Now, usually layoffs can be a sign of a good thing, right? Usually layoffs can be like, oh, the company's, not a good thing for the people who are getting fired, but, Wall Street talk. It's good for the company because, oh, they're saving money. They're saving money. But when you have this widespread layoffs like we've had, it can be a sign of a harbinger of bad things to come. More layoffs, more people getting fired, not just in tech, but maybe in the broader economy, a lot more people could lose their jobs. That's bad. So it can be a good thing depending on the economic situation, and it can be a bad thing depending on the economic situation. So I'm paying attention to economic news. I'm paying attention to global news. Just because the markets go down one day doesn't mean I rush in and buy. I'm not eager to buy every single dip because then when the shit really hits the fan, then you really have run out of money and you have nothing left to buy the actual dips. That's what I like to do. I like to buy the actual dips. Big news. When everyone else is going, oh my God, that's it. Markets are done. Markets are over. You'd be a fool to invest now. That's when I'm investing. And if you look at my portfolio, which I'm not going to share, but maybe I'll put some stuff on the screen for you, you'll see that the stocks that I was buying when everyone else was going, you're buying Netflix now? Are you crazy? I'm up over 100% on Netflix. I'm up over 100% on Nvidia. I'm up 60% on others. And I'm down on some. And some I'm only positive like today. Today is a strong day because Apple is reporting earnings, and we've had a lot of strong earnings yesterday, like Facebook had earnings, and even though they weren't great, they were better than I guess people were expecting. Daily active users were up, and that's really all that they care about, similar to Peloton, who had earnings. and it was pretty bad earnings, but subscribers are up, and that's really all Wall Street cares about. They want to see the growth continuing to come in. This is not my towel. That's really what Wall Street cares about. So the point to all of this is that when markets are down, I'm buying a little. And that's when everyone else is going, you're crazy. But I'm not crazy. I'm a good investor, and I know how to invest. I know that when everyone else is freaking out, that's an opportunity. And I'm buying good, high-quality companies. I'm not buying all in. I'm buying a little at a time. And most importantly, I'm not going heavy into speculative stocks. I'm not going... So like I was saying earlier, if I buy 1,000 shares or 100 shares of a company that I really want, a really good long-term company that I plan on holding forever, that pays a dividend, that's had high growth over the last 10 years, dividend raises over the last 10 years, or growth, like it's a growth stock that doesn't pay a dividend, but what do you need 3% in a dividend for when your stock is, going up 300% in a few years? You don't need that dividend. When it comes to speculative stocks, right? So I've made videos in the past where I've said, well, I'm buying this speculative stock, and people really go crazy in the comments because, oh, this guy is an idiot. He doesn't know what he's talking about. The thing about speculative is I'm only buying a small amount. I'm treating it like a lottery ticket. I'm only buying what I'm willing to lose. And most people don't do that. When it comes to speculative stocks, most people do it in reverse. And here's the key thing here. They shun the boring stuff like index funds, like boring dividend or growth companies. They shun them because they heard on TikTok that this was going to be the next big stock that was going to make everyone super freaking rich. So they go all in. And then what do they say? If it goes up. Well, I do that too when I buy speculative investments, but I also say, what if it goes down? What if this stock isn't a big winner and I lose everything? So why would I put everything I have into something high risk? You wouldn't go to 7-Eleven and buy a lottery ticket, would you? And go, well, I'm buying $10,000 worth of lottery tickets. No, you'd buy a couple lottery tickets, you'd lose, and you'd go, well, I knew that was going to happen. And that's how I treat speculative stocks. And maybe they don't lose, but maybe they don't go up as much as you were hoping. Or maybe they go down and you've tied up all that money. I don't operate that way. When it comes to speculative investing, I buy a very small amount. So like I said, let's say I'm a new investor and I'm looking to buy 100 shares of, say, Microsoft or Amazon or something like that. I can't afford 100 shares all at once, but I am going to be adding to that position over the period of many, many years. Maybe once it's all said and done, I have my 100 shares. Takes me a while to do, but that's okay. I'm building a position. When it comes to something speculative, I'm only buying 10 shares, right? And if I'm buying 1,000 shares in a company and I want to buy something speculative, maybe I'm only buying 100 shares. You know what I mean? I'm not going out there and buying the entire position. I'm not doing it in reverse. I'm not buying 1,000 shares of something speculative and 10 shares of Johnson & Johnson, because what if I'm wrong? So that's how I invest. That's how I pay attention to these things. I'm very conscious of what the overall markets are doing, so I'm never just going all in. I never do that. I buy little at a time. And now I'm up huge on these stocks. Meanwhile, all the people on TikTok who were going, what are you, nuts? You're an idiot. Don't follow this guy. He doesn't know what he's talking about. They haven't bought anything because they keep thinking it's going to get worse. Well, I'm an optimist, and I think, especially when it comes to the stock market, things always get better, right? Maybe short-term things are rough, but long-term, I'm holding these stocks 10, 20, 30 years, right? I'm investing for the long term. So I don't care necessarily that I'm down 25, 30% in Amazon or Microsoft, because I believe long-term they're going to be higher than they are now. So I'm done with my laundry, which means I always miss a sock. One is gone. Rest in peace. Thanks for watching. If you thought this video was helpful, you know what to do. Thanks for watching. Have a good day.